Welcome to this capsule, brought to you by ThomasLloyd. I'd like to welcome from London Nick Parsons, who is Head of Research and ESG at ThomasLloyd Group. We're here today to discuss a very important topic. It's about measuring impact, and we talk a lot about Asia. Because, as we all know, infrastructure investing is gaining acceptance as an asset class, and ESG investors, they welcome new opportunities, especially also in Asia, but they face the challenge with a lack of sustainability data. So, Nick, welcome to the program.
It's my pleasure.
Let's start with an easy question. What is, in your view, the difference between ESG and impact?
I wouldn't say it's an easy question, but I would certainly say that it's a crucial one. And there's a lot of confusion around the terms. The way we look at it is to say that ESG is about behaviors and impact is about outcomes. That's to say the difference that you can make to lives and communities and countries and economies and societies. So one is about behaviors on the journey, and the other is really about the outcomes that you have at your destination. It's the real difference that you can make. And it is important to make that difference very, very clear. There's a lot of people who now, for example, are buying ESG funds, which are basically a fund of listed equities, but they'd be very hard pressed to tell the difference between what's in their fund and what's in any of the major equity indices, whether that's the CAC 40 in France, the DAX in Germany, or the S&P in the US. And really, I think a lot of investors will be very surprised at what they get when they do invest in ESG funds, because it's probably not what they thought they were investing in.
So let's look at one topic you like, one of your favorite topics. It's about sustainable energy infrastructure in Asia. And let's look at what this can entail.
The first and most important point to make is that we are direct investors. We create assets, we build infrastructure, we develop, we finance, we own, and we operate sustainable infrastructure assets in the Asia region. In the first instance, these have been in sustainable electricity, whether that's solar or whether that is biomass. It is producing sustainable electricity where there is growing and ever growing and increasing demand across the Asia region.
Let's look at the region itself. Why Asia? Why not Europe?
Well, Europe is a stagnant economy, and Europe has got stagnant population. The total electricity consumption in Europe has only increased 7% over the last 20 years. In Asia, it has trebled. So there's a big increase in the demand for energy, and it's that increase in demand to which we're responding. There are many reasons for that increase in demand, but two of the biggest are economic growth and population growth. If we look over the last 10 years, there's no country in the Asia region which has had even 1 year of negative growth. And that's in the 10 years prior to the COVID pandemic. If we look at the most recent experience and take the last 5 years, well, again, Asia has had average growth over that period of 5% per annum. That is substantially more than any other region in the world, and a great deal more also than we've seen in Europe. So we've got a growing economy. We've also got growing population. The Asia region, according to the United Nations, is going to grow by 650 million people between now and 2050. That's the equivalent of adding all of Europe and half of the United States. So we've got population growth, we've got economic growth, and there's a third phenomenon, which is urbanization. That's to say, as people move away from the agrarian economy and the countryside, they go to work in the big cities, then there's bigger demand for electricity, for example, for air conditioning, for cooking, heating, lighting, and all the trappings that we would have of a middle-class life in the West. So we've got demographic growth, economic growth, and urbanization, that's leading to a huge increase in the demand for electricity.
So, Nick, when we talk Asia, is China included here?
China is included in the IMF's definition of Asia and the one to which we work when we're going through these figures. But I would stress that we've got no investments in China, and we don't plan to have any. We're investing elsewhere in some of the really fastest growing market-driven economies in the region, those which have stable legal systems, which are often based either on the US or on London law, and which are very attractive and open to foreign direct investment. Those are the countries which we find particularly exciting.
You talked about growth rates in Asia. You can also mention the growing demand coming from a new middle class. What about this aspect of growth? What do you make out of it?
Well, it's here and it is a fact of life and it's going to continue. And there's an added feature, certainly which has been there for the last few years, which is energy security. It's something which has become very, very topical in the light of recent events in the Ukraine. But countries across Asia have been very focused on energy security for a number of years. And partly that's because that delivers economic resilience. Because a lot of countries previously would have been importing fossil fuels, whether that is crude oil, whether it's coal, or whether it's natural gas. They'd be importing from other countries. That would put a strain on the balance of payments, and that puts them in an economically vulnerable position. So in part, the transition towards sustainable and renewable energy has been driven by the desire for energy security. And that's a process which we can see is only going to increase over the coming years.
You've been talking about the growth rates, you've been talking about the change, the growing demand in energy and energy infrastructure, but what about measuring all these impacts you have? An investor wants to know, what am I gaining, but what kind of impact am I getting, and how do you measure that?
Well, measurement is very, very important, and evidencing what we do is an increasingly significant part of the job, not least because we've chosen to be regulated under Article 9 of the SFDR. That's to say that we're a dark green investment fund. We hold ourselves to the highest standards of accountability, evidence, and transparency. Now, we're able to do that because of our unique position as owners of these assets. Alongside our local partners, we own, finance, develop, and operate these assets. So, for example, this gives us access to proprietary information on wages and salaries, on health and safety incidents, on gender imbalance, across a whole series of metrics which simply wouldn't be available to other investors because they don't have that ownership position. So because we directly own the assets, then we have a whole bank of proprietary information which we can evidence and which we can show to investors and which we can show also, if necessary, to auditors and regulators to show what we're doing. So we can evidence things through our direct ownership. And if I could just give you the example, perhaps, of our investments in the Philippines. The Philippines is a fascinating case study because there we pay local taxes, both from our solar plants and also from our biomass plants. Now, as well as that proprietary data that I just spoke about, we've got access through our local partners and through organizations such as the Philippine Commission on Audit. We've got access to audited data at the level of the local municipality. So we can see, for example, where our tax pesos, our tax dollars, were actually spent. And we can see the improvements in programs on sanitation, on health and education, on roads and schools, on women's livelihood improvement programs. And we can actually see those in detail, and we can draw a straight link across between the taxes that we pay and the improvements that are made to the communities in which we operate. So I think we've got an enormous amount of data which we're happy to present to our investors, and we do so writing annual impact reports, and in future we will be doing so through annual ESG reports on top of that. So we're very happy to evidence this to the highest standards of accountability. And investors can certainly have confidence that when they invest in sustainable infrastructure through us, their money is doing exactly what they would wish it to do. And it's not just going to some of the top 20 companies in every particular jurisdiction through listed assets. Their money is making a difference, and we're happy to show what difference that is.
Nick, thank you so much. Thank you very much also from my part, and this was Sphere TV, brought to you by ThomasLloyd. Stay tuned.